Hello and welcome to another update video about Natgas. So Natgas has not really moved since Friday. Obviously market is open again as we're heading into a new trading week. And Natgas is still below our resistance area. That resistance area hasn't moved here. This one hasn't moved in a couple of months. Okay, so since basically we've bottomed there in this third wave in February, middle of February, end of February, that since then this resistance area hasn't moved. The market basically over the last couple of months has only been moving sideways. Therefore, there hasn't been much exciting movement. We've seen now, end of last week, we've seen some movement pushing the price higher. There was a gap to the upside. We've broken above this descending trend channel, but we are still below resistance. So what I can't confirm yet at this stage is that a low is in place yet. It doesn't really look great, this structure. I have to say though, that it's possible technically that that we're just sort of here in this flat structure, that the wave 4 could become quite aggressive, because this decline, which started on the 30th of October pretty much, seems to be an ending diagonal. In ending diagonal patterns, the wave 4s can be quite aggressive. As long as we only see 3 waves to the upside, there is no low in place for me. I need to see a 5-wave pattern, and that ideally would involve a 5-wave pattern above resistance. So when we have a resistance area on the chart, we need to technically allow the price to max it out if it wants to. A break above resistance, because these areas are nothing more than pivot areas, a break above that pivot would indicate that something more bullish is going on, a more bullish interpretation is needed. But currently the idea is that after this wave 4 topped, we wanted to see a wave 1, we wanted to see a wave 2, a third wave down. This here could be the 4th wave. A flat structure is classed as a sideways correction. So the wave 2 was clearly a sharp correction, a zigzag. So it makes sense that the wave 4 would be sideways. Doesn't mean it has to go really just sideways. It could go a little higher. It's more like the type of correction. So flat corrections in which we have an A, B, C structure, and the B is very aggressive. That looks more like a sideways range than that sharp correction, that sharp corrective rally here. But yeah, now the idea would be we are in this 4th wave, and then we could get one more low in this 5th wave, as you can actually see it on the chart. And that 5th wave to the downside then could really complete this long-term downtrend that we've seen on the Natgas chart. Now, if we zoom in a little bit further and I go to the 1-hour time frame, obviously that gap that we've seen, I think it was on Friday, that isn't making things easier, because you don't get any of the micro structures really that you would normally need. But what I can tell you is that after this potential 3rd wave to the downside bottomed here on the 19th of February, this level obviously acts as support, but we only have seen a so-called corrective rally after that. These corrective rallies typically do not indicate that a low has already formed. Had this been a nice and clean 5-wave move to the upside, this small rally that we've seen here from the 16th of Feb to the 5th of March, so had this been a 5-wave move, this would have kept the door open clearly for higher and possibly a more bullish interpretation. But the rally has been 3-wave-like. And so I consider that just the A wave of a wave 4 correction, because a wave 4 was due anyway, considering the context. Then this is also here a 3-wave move down, A wave down, B wave up, C wave down, or actually we could label that as a W, X, Y structure most likely, and then the Y is an A, B, C. So this could have completed that B wave, and we could now be in this C wave rally, and then we come down. In terms of standard resistance, it's defined between $2.07 and $2.49. In addition to that, we can, based on the micro patterns that we've seen so far, A wave and the B wave low, we can calculate an ideal target range for the C wave. As you can see, it is between $2.11 and $2.50. It is pretty much in that overall resistance area. And if we then zoom in a little bit further, see the problem is we don't really have anything here we can work with. There is just a gap. And yeah, I mean, it takes a break, I'd say. I mean, normally the way this looks now, I mean, it takes a break below the 50% fib level at $1.77 for a first indication that the top is in place. But yeah, there's not much I can work with. So at the moment, I would assume, because the C wave, the first C wave target is $2.11, that we might get there. And then after that high has been made, you know, we have to be watching for a fifth wave to the downside. Alternatively, if the market can form nice 5 waves, like 1, possible 2, then this would be a 3, 4, 5. If we can see something like that, then I'm very open to the idea. I'm going to be very open to the idea that a low could have formed already, but it's a bit too early to confirm that and currently not expected. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.